Welcome to another S&P 500 analysis. Today is December 26, 2020. Are you ready for some end-of-the-year fireworks? In this video, we'll look at what the S&P 500 might do going into the end of the year, the possible headwinds, and the potential fireworks. We'll look at the market sentiment and the internals to see what they are telling us. Finally, one of my followers has asked me about silver, so we'll take a look at silver and the gold market and see what they might do in the near future. Let's start with this monthly chart of the S&P 500. As you can see, so far for the month of December, the range is relatively small compared to the prior month. Especially looking at November, the range is 366.25 of a point. And right now for December, it's only 93.3 points. So that's quite a contrast. And even, for October, it was over 300-point range. And September, it was also, got pretty close to 400 point. So this could turn out to be an NR7 for the month of December, although we still got a week or so left. And it could expand upward if we get some sort of firework going into the end of the year. But if the market experiences some headwind, it could also yank it down and expand the range downward. So we'll keep an eye on it to see what the range expand much, or it's just going to be relatively stable around this area and possibly get up to this 3,800. And we'll see how that play out and see what kind of candle it will end the month with. Then we kind of get some idea what January might look like. So right now, for the time being, it is still in an upward trend. Here on the weekly chart, we could see that it pulled back a little bit last week, got a little bit of a down week, and we see that range was a little bit under 75 point. It was 74.76. Okay? And if we take a look at what the, how much was it down from, and it was basically down like 6 points from the prior week, 0.17%. So it's not really much. And, that's due to the holiday week, the shortened week, because basically it was just 3 full trading day. And also it's not too many traders actually doing much of a trading even for those 3 full days. And then on Christmas Eve, it was a half day. So, it kind of, sort of expected that we would get a quiet week during Christmas. So right now, the trend is still looking to be on the upside because the 10-week and the 40-week moving average are still trending up. And also, we did see a little bit of beginning of a one-time framing down. So we're going to see would that continue by pulling back, or would it reverse itself and expand up and move up to the toward the 3,800 level. Then we could see a resumption of the one-time framing up. But so far right now, the price action, although it got above this megaphone, this long-term megaphone channel, and is staying up there, so we could see a pullback that could come back and test these level near this 3,600 level here. Remember we talked about this 3640, so we're gonna take a look at the price action in a little bit more detail later on the S&P 500. But first, we're gonna take a look at the market sentiment and the market internal and see what they are telling us and what is the state of the market. On this sentiment chart, we see that the VIX is still relatively stable inside of this 2030 zone here and just hovering just right above this 20 level. So there's not much fear, and neither is there too much of greed or optimism there. It's still basically cautious, in a cautious mode. Although on the put call ratio, we see that it dipped down to 0.41. So it's getting a little bit too greedy here. So we kind of have to keep an eye on that to see what the coming week this will continue. Would it come back up to maybe at the 0.5, 0.6 area to keep it a little bit neutral? So because it's pretty hard to read, especially when you have a short week. But all in all, not much have changed in terms of fear and greed. And looking at the up-down volume ratio, and not much have happened also for the downside. We're essentially looking at 1.8. It's basically less than 2, minus 2 to 1 on the downside on down days. And here we see that on Wednesday, we actually have much more up volume than down volume for a day that closed down. And the advanced decline, the daily advanced decline is relatively holding up here. And on Wednesday, there was actually 1,239 more advancer than decliner. And on the half day, Thursday, Christmas Eve, there were 687 more advancer than decliner. So although we see a negative divergence here on the up-down volume, there's actually more down volume than up volume by a ratio of 1.8 in favor of the down volume. And here looking at the New York Stock Exchange new high, new low, we did see 187 more new high than new low on Thursday. And on Tuesday, it was actually 291. So that's not bad for a little bit short week and a quiet week. So again, looking at the new high, new low, nothing there to say that we should be concerned about the market turning over. And here the New York Stock Exchange cumulative AD line, you can see that the AD line came up along with the SP 500, put in a new high here on the cumulative AD because on Thursday, it closed at 44,987, while the S&P 500 did not close at a new all-time high. So that we could see the AD line, or at least the advanced decline, cumulative advanced decline, is continue to show strength, while the S&P 500 is kind of consolidating right near at the current level. And now let's take a look at the Nasdaq market. On the Nasdaq, we see that the up-down volume ratio was positive throughout the week. Once again, the Nasdaq, the tech stock seems to be holding up. And also the advanced decline, although on Friday it did see a little bit of a negative divergence. It had 209 more decliner than advancer, while the Nasdaq was up. So we'll see how this thing will hold up, because right now in this chart here, these internal on the up-down volume and the advanced decline certainly show there are still strength in the Nasdaq market and in the tech sectors. And here looking at the new high, new low. So once again, you see there's a positive number here on Thursday with 256 more new high than new low. And throughout the week, we see a couple days that is above the 400 level. And that is very positive. And looking at the cumulative AD line for the Nasdaq market, we did see a little bit of a pullback on Thursday. So see a little bit of a negative divergence. And that could due to just a shortened session. So we'll keep an eye on it and be a little bit cautious about this and see what it pull back some more and create a more of a negative divergence, or would it reverse itself as soon as we get the trader back in the office in the coming week. So we'll see and see how this thing hold up. But right now, although a little bit of a caution here, but nothing to be concerned of, at least not at this point in time. So as you can see from the sentiment and also the internal, the market is still holding up. So let's go and take a look at the S&P 500 in a little bit more detail and then see what the coming week might hold. Now let's take a look at the S&P 500 daily chart here. As you can see that we saw this S&P 500 came down and retested this 3646 area, essentially this pivot high here, and we're talking about this breakout of this bull flag here. And you see that it came down quite a number of times, so it's definitely, this level seems to be a relatively strong support here. And we are talking about getting back above this 3720 and move toward this 3,800 level. So right now, it still seems to be holding up, and we could see a move next week into this 3,720 and possibly get up toward the 3,800 level. Now, there are a couple things that could derail this price action, and it could force this thing to come back down and retest this 3645.99 or possibly even come down to this 3588. And that is that relief bill, or they also tied to the government spending bill that Trump have indicated that he will veto that bill. So if that happens next week, then that could throw in a lot of uncertainty for the market in terms of the government being shut down, and the relief package is not going to help various small businesses and individual Americans. Those are the potential downside and a headwind that could force this thing to come back down and possibly retest this 3646 area and might even push it down to the 3588 and finally, once and for all, maybe come down and fill this gap before we get a big push up toward the 3,800 level. And again, want to point out that the E-mini S&P 500 still have a hanging or outstanding all-time high that was made in the extended hour. So that again indicate that we should expect to see the S&P 500 to make a new high in the near term, in the near future. And no, we are not referring that in 6 months or a year from now. We're referring that in terms of days and weeks. All right. So with that said, that's basically what we are looking for. And here are the possible major move area. Remember, we talk about this potential 141 area here at this 3891 area here on this extension, because this 3720 extension is it got tagged, and right now we basically want to see what be able to close above it one more time and then move toward this 3,800 level, and that would push this thing toward this 141 and also in confluence with this 618 major move of this particular bull flag that we are looking at. Now, again, these type of pattern formation is very subjective. Right? I drew it as a bull flag, and other people could have drew it as a wedge, and they basically looking for this wedge breakout or a breakdown, right? But to me, it is a little bit more subjective. But if it works, for you, then that's fine. The way that I like to do it is using this bull flag, so I could do a little bit more of a objective, projected move. Not saying that it will be any more accurate than the people that is looking at this wedge. It's just individual preference. All right. So because right now it's in a new high territory and it's a never land. So anything that you use, it's just as good as anything else. All right. Because there are no prior level above this current level to give us some potential price resistance to project to. Okay. So that's basically what we're looking at on the S&P 500 is the possibility of moving up toward this 3,800 level into a year end, and then maybe in January, February timeframe, we're going to take a look to see what are the possibilities for the market to continue to move up and get up to this 3,900 level. All right. So now let's go and take a look at the other major market indexes and start off with the Nasdaq 100. And you can see that the Nasdaq 100 also came down almost to the 12,439 to test for that support here. Right? We booked this pivot high and came down and tested this 12,204 and then bounced it back up. So right now we are looking for the Nasdaq 100 to continue to move up toward the 13,000 level. And again, if it come back down, then these two potential support level will be back in play. which would be the 12,439 and the 12,204. So, here's the projected move that we are looking for, right? We're basically looking at this, again, I'm basically looking for this as a little bit of a triangle here for this breakout, right? And then basically projecting this, the height of this triangle onto this breakout level to get these major move level. And we're basically looking at the 618 at the 13,515. But right now, year-end target, we're basically looking at somewhere around that 13,000 level. And the pullback is, again, 12,439 and 12,204 area. And here's the Dow Jones Industrial. Again, Dow Jones Industrial is still confined inside of this channel, and we are still looking for the industrial to break away from this channel and move toward the 31,000 area, right? This 31,000 level. And I'm basically looking at this as, again, a bull flag type of a move, price pattern. And as soon as we get a break, then we will move this point here to get the revised projection, because right now we are projecting up here somewhere around the 32,000 level at the 618 if it breaks this channel. Now again, there's a lot of people who also could look for a breakdown, but to me, I see that the Dow theory have sent us a message to tell us that most likely be another new high for the Dow Jones Industrial before it rolls over. So that's why I'm looking for this thing to break out of this channel and into the 31,000 area. Might not happen before the end of the year, and it could happen in the month of January, but who knows, right? Right now, it's anybody's guess. So basically, that's what I'm looking at. And if it come back down and break this channel and get beneath the 29,670, then I'll be looking at this 29,199 and the 28,950 as the potential support. So because we have this pivot high here, it came down a few times and then bounced back up. So that kind of shows there's some strong support at this pivot, although this one here, it dipped down and bounced right off this support. So we're basically looking for the 29,199 as the potential primary support if it breaks down from this price channel here. And the Dow Jones Transportation, again, it's basically still hovering above this 12,379 level, and we're looking for this thing to bounce back up toward the 13,000 area. So right now, it could be consolidating sideways and wait for this trend line to come up and basically tag the trend line and bounce up back to the upper portion of this price channel that we have here. Right, so you can see that this price channel from the March low and all the way up here. So we're basically looking for this thing to see, could it come up and make another new all-time high and get above this 13,000 area. But if it decides to pull back a little bit more, then we look for this 12,096 area. Okay, and so we got this gap still needed to be filled. And here's the Russell 2000. Remember we talked about this channel. We expanded up, and right now it's essentially just sitting up at this, tagging this upward trend line of this price channel. And we spoke about getting up to that 2000 level, and you can see it closed at 2003.9 on Friday. On Thursday. And right now it's kind of bumping against this trend line here. We could see a little bit of a pullback, and what I did is basically put in a Fibonacci retracement here. And if we do see a pullback, we could see a 38.2% pullback near the 1827.70. But right now in the near term, I'd be looking at this area here for the pullback. And that would be somewhere around, 1936 So this pivot low is 1934.7, and this pivot high is 1935. So if I put in a little bit of the line here, so we're essentially looking at this 1935 area. Right? If we see a pullback, we could see maybe possibly this 1935. So wouldn't be surprised to see a little bit of a consolidation before it pushes up. And the next level, here's that 141 extension, is 2025. So we could see this may come up and hit this this level here, and then do a little bit more of a consolidation and pull back and possibly test the 2000 and also get down to this 1935. So right now the Russell is still a lot of strength, and so if for anybody thinking the market is going to roll over with the Russell hitting all-time high and showing strength, that kind of defy one's logic of looking at the market about the small cap leads the market. Well, if the small market lead the market up, then also have to lead the market down, right? So definitely it is not showing that. So that is the look of the SP 500 and the other major market indexes. And now let's go and take a look at the precious metal, the gold and the silver market. Here looking at this gold weekly chart, this long-term gold weekly chart. See here back in September of 2011, it made a high of 1923.70. And since then, it kind of pulled back, and it's been pretty much range bound here, like here for the next 6 year, and range bound between 1370 and 1170. And then in June of 2019, then it broke out and made a move up to a recent high of 2089.20. Since then, it pulled back, and right now, look like it might try to make a move back up. But before we take a look at that price action, I just want to review with you about these levels that I put forth earlier, and how I came about with these potential support level on the way down that I said, we need to see a test of 1923.70, which is this particular high here, right? And also the 1804 and 40 cents. And it is these level up here. Because if you look at here on this move up, it broke out and got above the 1804 without much of a retest on a back test, and then continued to push through and made a new high and took out this level here. So once it got up here at the 2089 level and starting to come back, then I said, yeah, we need to see this, these two breakout level to get back tested for potential support before we could see a little bit of a continuation on the upside. Or would it tell us that this upward move is pretty much over and be working its way back to this long-term range, or this 6-year range bound level here at 1369. But for the near term, we're essentially looking at this 1804. And as you can see, it came down to this 1804. And if we zoom in on the daily chart, you can see just recently it came down and dipped below that. And as a matter of fact, it made a low of somewhere around 1769 and 20 cents. So right now it seems to be pushing back up, and maybe it try to test this 1923.70 for potential resistance and see would it be able to get back above it. And if it does, then we basically are looking for this thing to continue to move back toward the high at 2089.20. But if it doesn't, and it come back down and retest this 1804, and it breaks below it, then we could see it come back down. And the first area that I'd be keeping an eye on would be somewhere around this 1700 area, right near this low volume zone here. So that's basically what I'm looking for gold. And also the other thing is if we look at the Fibonacci retracement, let's say we put in a Fibonacci retracement here, and you can see gold came down to this pullback near the 50% retracement, right? And then we got a nice bounce and got back above the 382, which is depending on which orientation you're looking at, essentially they pull back 38%, and right now it's pushing it back up above that. So if it could maintain and stay above that 382 level, then we see it maybe make another test at this 1923. If it doesn't, and if it come back in the next level, again, basically retest the 50% retracement and possibly come down to this 1700 level at the 618. Yeah, just for those that might be a little confused, if I draw it here, Fibonacci retracement come up here, then you can see this is the 382, 50%, and 618. Okay, so it's depending on the orientation that you draw the Fibonacci retracement. Now let's take a look at silver. This is a weekly chart of silver. As you can see, and silver made an all-time high back in April 2011 at 49.56. And ever since then, it kind of pulled back and got into the low. Here's the recent low on March 2020. And the low was $11.70. Then it got a nice bounce off of that. And, essentially got a little bit of a support down here from this high pull down and established some support here around this 1895. Then it broke that support and been working on it for years, right? Since 2014, in August 2014, it broke this 1895 support and was having a tough time getting above it. Although it made a little short period of peak above that back in June of 2016, but other than that, it's basically been beneath this 1895, and until recently, it broke this 1895 back in July of this year, 2020. Then it proceeded up, and it just moved above this $21.22 and continue to move up, took out this particular support term resistance at the 26 level and came up close to $30 level before it pulled back, kind of chopped around and tested this 26 area for potential support, and it finally broke back below it. But right now it appears that it is holding up this, holding above this $21.22, this long-term support area, long-term resistance area also. So it did hold above this 21. It did not break below this 21 and come back down to retest this 1895. But we probably will see that 1895 in the future. But for now, it doesn't appear that it is going to come down to that level yet. So right now, we're basically looking at price action, trying to get above the 26.10 and back toward the $29.91 area or the $30 level. So let's zoom in and take a look at the daily chart here. And you can see on the daily chart, it is getting close to this 26.10 here, just kind of chop around and try to make a move and put in a little bit of a M pattern here, right? So we'll see how this thing will come up and break this potential resistance and work toward the 29.90 in the near term. If we put in a Fibonacci retracement on this swing, you can see that it came down to this 382, bounced around a couple of times, and then right now it seems to be moving away from that. So we'll see what this thing pushes up and get into this 3452 area. Essentially, that's another potential resistance area at 3545. Remember, that's the area here, this potential resistance here back that was made back in September 2012. That was the last time that it came up to this level. So right now we're essentially looking to see would it be able to push up to this 29.90 and then work itself up toward the 35.40 on the upside. And on the downside is if it pulls back, then we essentially are looking for a retest of this 21.22 and see would that get a nice bounce off the 50% retracement. If it doesn't, then we're essentially looking at this retest of 18.95, and that would be down here at this 618, somewhere around this $19 level on this Fibonacci retracement. Again, I'm referring these numbers on a reverse area, reverse percentage, because it all depends what orientation of the Fibonacci retracement that you are drawing. And the reason I draw it this way is so I could get the these extension here. But if I do it this way, then you could see that these 382 and 618 levels. All right, so that's basically is the look on the silver. And right now it looked pretty positive. It could hold up at 26. If we get above that 26.10, then look for the 29.90 at the $30 level in the near term. And if it cannot hold, get above the 26.10, then look for the retest of the 21.22 area around this 50%. So in summary, the market held up pretty well for a shortened week. But there are a couple of these headwinds that could derail the market and pull it down in the coming week. And one is that relief bill that Trump indicate that he might not sign, and that could put a spin on the market and create a lot of uncertainty, because that could ultimately also shut down the government because it's attached to the spending bill. So that is one of the major headwinds, even though we know a bill will be signed eventually, but it's the uncertainty of when a bill will actually be signed and what sort of relief will actually go to the American people and also the American businesses, especially the small businesses. So that is one major headwind in the coming week that we have to pay attention to. And the other one is the surge of the coronavirus, the COVID-19 and the new strain that been, floating around in UK and South Africa. So that will also create some uncertainty for the market and headwind for the market for the coming week. Now, the upside, the firework, is basically the momentum and the relatively strong internal for the market. And again, also the E-mini S&P 500 extended our message, told us that beware of a potential new high of the S&P 500 because it made a new all-time high in the extended hour that is still have not been tagged during the regular session yet. So that is a positive that could spark some firework into the end of the year. Then the other thing is also the Dow theory have told us that to be on the lookout for another new high from the Dow Jones Industrial. And with the recent Fed announcement that the bank could resume buying back the share, and that will help push the financial sector up, and that will spur some firework into the S&P 500 and push that into a new high toward that 3,800 level. So those are the headwind and the potential firework coming into the end of the year. I hope you find this video useful, and be sure to smash that thumbs up for me to help me promote this video on YouTube. Thank you for watching, and stay safe